Real talk. You've heard someone say, I just bought Tesla, or I'm buying the dip on Apple. Have you ever actually asked them, what does that even mean? What are you buying? Here's the uncomfortable truth. Right now, if you've got a 401k through your job, you already own stocks. Millions of Americans have real money sitting in the market and have zero idea what they actually own. That gap between owning something and understanding it is exactly how people get hurt. So stick with me for the next 5 minutes. By the end, you'll understand this better than most people who've been investing for years. Let's go.
What is a stock? A stock is real ownership in a real company. Not a bet, not a piece of paper. Ownership. Picture Apple like a giant pizza, cut into 15 billion slices. Each slice is a share. You buy one share, you own one of those 15 billion slices. The iPhones, the MacBooks, the App Store, a tiny piece of all of it belongs to you. Apple gets more valuable, your slice gets more valuable. Apple drops, your slice shrinks with it. Now here's the question almost nobody asks. Why would a company let random strangers own pieces of it?
Simple. They need cash to grow. Instead of going to a bank and paying that money back with interest every single month, companies sell pieces of themselves to the public and keep the money, no repayment required. Here's how powerful that trade can be. When Apple first went public in 1980 at $22 a share, a $2,200 investment back then would be worth over $18 million today. That's not luck. That's what ownership does over time. Quick gut check. Comment below and tell me, did you know you already own stocks through your 401k? A lot of people don't realize it until right now.
How do you make money? 2 ways. Only 2. Number 1, the price goes up. You buy one share of Amazon back in 2010 for $135. You do nothing. You just hold it. That same share is worth over $200 today. Your money grew while you were living your life. That's called capital appreciation. Number 2, dividends. Some companies pay you directly out of their profits every quarter just for owning the stock. Coca-Cola, for example, pays shareholders roughly $2 per share every year. No selling required. The money just lands in your account. Think of it like being a landlord, except the tenant is a Fortune 500 company, and you never have to fix a toilet.
Now, here's the part nobody wants to talk about. Stocks go down, too. Hard. In 2022, Netflix lost around 75% of its value in 6 months. Meta dropped nearly 80%. People who panicked and sold at the bottom locked in real, permanent losses. If you're going to put money in the market, you need to accept both sides of that deal before you start.
Where and how do you buy them? 2 main places in America. The NYSE, the New York Stock Exchange, the big trading floor with the flag you see on TV, home to companies like Walmart, Coca-Cola, and Berkshire Hathaway. The NASDAQ, where tech lives. Apple, Amazon, Tesla, Google, Meta. You don't need a suit and a trip to Wall Street. Pull out your phone right now. Fidelity, Schwab, Robinhood, any of them. And you can own a piece of Amazon in about 60 seconds for less than the price of dinner out. 2 types of stock. Know the difference. Not all stock is created equal. 2 main types. Common stock, what most Americans own. You get voting rights on company decisions, highest growth potential. But if the company goes bankrupt, you're last in line to get paid. Sometimes you get nothing. Preferred stock, the conservative cousin. No voting rights, but you get fixed dividends, and you get paid before common shareholders if things go badly. Easiest way to remember it. Common stock is the lottery ticket. Big upside, real downside. Preferred stock is the steady paycheck. Less drama, less growth. Want to grow wealth over decades? Common stock. Want steady income without the roller coaster? Preferred stock. And here's the part that should really land. You're probably already in this game. That 401k at work? Stocks.
That retirement account? Stocks. The question was never whether you should be in the market. You already are. The only real question is whether you understand what you own. So, do you? 3 rules before you ever buy a single stock. 1. Only invest money you don't need in the short term. This is a long game. 2. Never put everything into one company. Spread it out. 3. If you can't explain what the company actually does in one sentence, you don't understand it well enough to own it. If this helped you actually understand your own money for the first time, hit subscribe. Every week on Darwinomics, we break down exactly what's happening with your money. In plain English, no MBA required. Drop a comment right now. What should we break down next? ETFs, index funds, crypto? I read every one. I'm Darwin. Stay sharp. Peace.